Hello traders, Gary Wagner with the Silver Forecast here, 11:15 a.m. in Honolulu, Hawaii, 30th day of Wednesday, and this is the daily report for silver. Silver currently up about 35 cents. It is closed for lunch in the Forex up to 37.45. There is absolutely no doubt this market has been more than resilient. As you can see on this 120-minute Henkin chart, we are looking at this double bottom that we got back through the last couple of trading days. There's no doubt about that. There's also no doubt that this market's resilient. As it came up, even though it gave us a little bit of a potential sell-off, that was right in here, the market was resilient and did recoup. Of course, we pulled profits. We are sitting flat in the market. My recommendation is what I'm looking at right now is any kind of a pullback to re-enter that market. As I blow this chart up, as you can see, we have had this market trading really over the last couple of hours in this pretty tight little range right in here. After the breakout here, and of course, the subsequent sell-off here in which the market came down and tested some of our lows, you can see, of course, that the market itself, in terms of consolidating, is really doing that right now. And that's these candles right in here. We are looking at our daily chart with Andrews Pitchfork in bar chart format. I have included the moving average, convergence, divergence, the MACD. And it is quite clear exactly how closely this has been following our channel line. As I said, now it has come down a little bit, but it does look like it has found a little bit of support. The key is right now is how is it going to react in this area? We can see that on at least two occasions here, it's not been able to penetrate on a closing basis and close above it. The market is moving higher. Realize that one thing about this particular type of a channel line is that it moves as the markets move, so it's not stagnant. And because of that, as you can see, as we move out in time, this line continues to go higher. So even just trading this particular channel line here is going to give us a lot of room and also allow silver really to move up quite substantially because, as you know, my upper target is still $43 per ounce on silver. Now, when we look at our Henkin chart, which is in daily format, this is where we've been drawing our channel line in with our Andrews Pitchfork. I want to look at this chart a couple of different ways today, traders. But as you can see, in terms of the activity today, that is this Henkin candle here, and you can see really this set of dojis that we had in which we had, this is when the market was consolidating and was fairly indecisive. Where do I think that this market is going to go before it runs into real resistance? Well, I'm going to have to say obviously the top of this channel line. And as you can see, the channel line moves. So as we go through time, it will continue to get higher. But if we take a look really at the distance between where this upper level of channel line will be and where silver is currently trading now, I think that personally that's really the upside target that we have before the market. And as I said, I believe it's trading higher, but I believe that for at least for a little while, it's going to trade off of this channel, something like this. And so that what we're going to be looking to do in terms of strategy is we're going to be looking as it comes down into this area on the dips, and we're going to be looking to cover as it comes back along this channel line. Until the market breaks above the channel line, I think that the best play is to work within that. Now, this market has absolutely been a runaway bull. It's outperformed pretty much everything, and that's indicative by seeing this one incredible rally that silver had. So that once it hit that rally, we didn't go into any kind of a congestion or what I'll call not a sideways trading pattern, but a very tight channel trading pattern until it hit that top. And as you can see, it has been trading right within this channel over the last week and a half to 2 weeks. My recommendation is going to be that on any kind of a sizable pullback, we are going to re-enter this market from the long side. And until we see differently, we are going to look at these channels as our decisive entry and exit points in the marketplace itself. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily report. Bye bye.